Guys, how we doing? I'm Ryan Mack. Welcome back to the Trading Guys. I'm going to fly through this today, right, because it is Saturday. It is 5:30 in the afternoon for me over in Indonesia, and I'm going to fly through it so we could get on with our weekend. I'm going to go out for a meal with my wife. Let's have a look. I don't know why that always says today since I updated it. I always do the week, right? And ever since I updated it, it keeps bringing me on to one day only. I don't know why it does that. Anyway, just so you know, if you're new to the channel, what you want to do is you want to take out a new piece of paper and your pen. You want to write trades or this week's trades, whatever, or economy trends, currency trends, whatever you want, right? And you want to write strong, weak, and then neutral, right? I know you're thinking, why isn't it strong, neutral, and then weak? It's because we do it in strong, then weak, then neutral, because what we're trying to do is we're trying to find through genuine 100% fundamental macroeconomic data, real life fucking information, what economies are strong, what economies are weak, and what economies are neutral. Once we find that out, we then, how you then select which trades you're going, which pairs you're going to trade, is you would then pair up a strong economy with a weak economy for the strongest divergence. You know, if pound was super strong right now and Japanese yen was super weak, you're going to see an uptrend in the market. So that gives you the reason, that gives you a genuine fundamental reason why you're taking a trade on GJ. You know, it's just like, well, I like GJ, it gives me loads of pips. Well, that's not a reason to fucking take it, right? That's a benefit. It's not a fucking reason to actually take the trade, right? You need a reason to take it. Drawing a triangle on your page and a candle breaking it, yes, that's fine for technical analysis. Everyone does stuff like that for technical analysis only, but technical analysis is number 3 in the chain. It's not a reason to take the trade, right? If you draw a stupid fucking line here and a stupid line there, and a candle breaks your line that you just drew 2 seconds ago, that isn't a reason to enter the market, right? This shit here is a genuine reason. But a guy who has a $5 billion account is not going to draw a triangle on his page and tell his wife, our fucking lifestyle depends on this candle breaking a triangle that I just drew on my page 5 seconds ago, right? Of course he's not. Do you know why he doesn't do that? It's because he's not retarded. That's why. So this is why we're going to cover fundamentals here. This is what I use for explaining it, right? This is Forex Factory. Everyone knows Forex Factory unless you are really, really new to trading. What I genuinely use, you know, all through the week is actually this. It's called tradingeconomics.com. It's far better. You get far more information on here. So if you're on Forex Factory, maybe you'll see 2 pieces of information on France, right? But if you look on Forex Factory, you might see, you know, 6 pieces of information here on France. You know what I mean? So you get far more information here. And also, let's say news is going to drop at 4 p.m. The minute the clock strikes 4 p.m., these numbers will be out instantly. But if you go to Forex Factory, it'll be like loading for ages and ages, and you're like, come on, hurry the fuck up, you know? So that's why. Now, the reason why, if you're probably thinking, well, if that's better, then why are you doing the review on Forex Factory? It's because it's much easier to change the countries here. If I want to change countries for the filter, I just go like this, look. I just go like that and click it. It's dead easy, you know, and I can add whatever I want and it filters it. If I come across to here, it's a massive pain in the dick. Look, you need to hit countries, look at that. You know, trying to do all that is a massive pain in the arse, right? So that's why I use Forex Factory for that. Okay, guys? So let's get started. Strong, weak, and neutral. I go through each individual pair one by one. Apart from Aussie, New Zealand, and China, I do them all together because you don't get a lot of news, but most importantly, it's because they're all positively or negatively correlated with each other, right? Aussie is very heavily positively correlated with China. What does that mean? It means if China's doing well, the Aussie dollar will do well. If China's doing bad, the Aussie dollar will do bad. And it's just to do with the fact that they do so much business together. If Chinese manufacturing is going sky high, they then need to buy tin, nickel, copper, iron, steel, lead, you know, whatever. They buy that from where? Australia. Why? Because Australia's fucking probably one of the world's largest mining countries. All right, and that's why you know they both have a similar correlation. So without any further ado, let's move on. Last week, What did I have last week? I had strong USD, weak NZD, weak CAD, weak Euro, neutral. I had AUD, CHF, GBP, and Japanese yen. So let's see what we have got this week. They don't just change from week to week, right? There are times where you do change one after a week or two, and one of my guys in my Discord group did ask the question, and it's a very good question. He's like, Ryan, you always say to us, sorry, that's another lesson. That's another fucking lesson. You always say to us, like, you know, if you're looking one week, don't change it. But I noticed, you know, on CAD, last week you changed it. Why? And it was a good question. This is why, you know, trading isn't very black and white. The reason for me changing it based on that was because within the market cycles go like this, right? And I'll show you in a second. Market cycles go like this, right? And it'll go bang, bang, bang. And then it will start going like that again. It will start coming up, you know, long and short. And then when it drops, it goes bang, 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 right? That's just how the market cycles work. However, within, this is called the macro cycle, right? So let's just say this is over the length of a year, right? This is spread over a year. This is the macro market cycle, okay? Within the market cycle, the macro, you have the micro. Just like on the charts, you've got the macro here and the micro down here, right? So within this, you've also got this. You know what I'm saying? So you will get kind of intraday / intra-week, maybe even intra-month strength from a pair like Canada, Australia. But overall, like you already know, the Australian economy's fucked. The Canadian economy's fucked. So you're still going to see strength in amongst those periods, but it's not this strength. You know, this is like USD strength, GBP strength. You know, you're going to see real solid strength in here. When you see the strength coming in AUD, it's just the micro market cycle, you know, the intraday market cycle strength, and then it'll go shit again, you know, a week later, 2 weeks later, okay? So that was a good question one of my guys posed, and I wanted to explain that to you as well. That's why that happens. This is what makes trading a little bit wishy-washy and a little bit hard, because you will contradict yourself loads of times. I'll guarantee you watch traders that will say something, and then, you know, maybe the next lesson they'll say something different, and you're like, he fucking said don't do that last week. He's just probably not given the full context, which I didn't give the full context last week, so that's probably what's happened, you know. It's very easy to do because there's so many. If this is a jigsaw, there's just, you know, it's a 1,000-piece jigsaw, you know what I mean. So moving on, let's have a look at what we've got. Chinese New Year, Chinese manufacturing PMI, 49.1. So you can see, look, it was previously 50.1, which is still bullish, but it's now dropped to 49.1. And what do we always say? Anything below 50 shows bearish. Anything from 50 upwards is bullish, okay? So bearish. This is still bullish, although it's dropped. Look, you can see it right here. It's dropped from 52.2 down to 50.2. Yes, it's getting worse. However, this is still classed as bullish, okay? Because it's still above 50. But what do we expect to see next time round? You know, it is getting, look, this got worse. This is getting worse. We expect to see maybe next time round, this one will be, you know, 48.8, and this one will finally, excuse me, be 50.1. Sorry, 49.1. You know, so it's going to move down. We expect to see it getting worse. If we expect to see China getting worse, who else do we expect to see getting worse in the long run? Aussie. Okay, so we have to keep that in mind. It doesn't mean it is getting worse, but we just need to build this picture in our heads, right, to get the whole lay of the land. So moving on, with the index -1. Okay, shit. CPI, we'd really like to see CPI. Quarter on quarter is sticky, so it hasn't really moved. CPI year on year has increased slightly, so that's quite decent. Trimmed mean CPI quarter on quarter is less, so yeah, it's called mixed data, right? You get bad, good, bad. It's called mixed data, all right. Trade balance, this is in the green. So what is trade balance? Trade balance is when, if you're in the green like this, okay, it's called a surplus, okay? It means you have more money, you're making more money than what you're spending. If it's a minus like this, it means that you are spending more money than what you are making, right? It's very, very simple. Trade balance is, if that's positive like it is now, that means this country is exporting far more stuff than it's importing, i.e. it's making fucking money, right? It's making more money than it's spending. So it's now green, it's in a positive, it's in a surplus. If they were importing more than they were exporting, that means they're spending more money than they're making, then they would be eating into their overdraft, right? I.e. they'd be at a fucking minus. That's how it works, which would then mean bearish, of course. This is quite positive for the country, although the New Zealand economy is pretty fucked, okay? But let's have a look at the numbers. So that's good. That's getting shitter. It's 54.4, 62.3, that's shit. But I mean, remember, that's not the manufacturing one that has to be above 50 means bullish. That's not manufacturing, okay? Import prices quarter on quarter is 0.2. It's slightly increased, so it's getting better, but way below forecasted, right? It is a lot better than it was previously. However, it's way, way, way below forecast, which means it's doing worse than they thought, okay? PPI quarter on quarter is worse. AUD private sector credit month on month is sticky. Yeah, it's pretty. For Aussie, for me, I wouldn't really say it was strong. It would be strong compared to a really poor economy, but for me, I'm going to put it on strong. Weak. I told you to write it down. I hadn't even bloody wrote it down because I was too busy talking. Neutral. Okay. Oh bosh. I'm going to keep Aussie at neutral for now because it hasn't really shown me anything to say it's getting weaker or stronger. Okay, NZD is still weak because the New Zealand economy is fucked and they don't really have anything to back it up. You know, their economy is built on lambs. You know, selling fucking lamb shanks, dairy products, and travel and tourism. Right, let's see what we've got coming up next week. Anything spicy? Yeah, so we want to see building approvals is quite good because retail sales month on month, we don't really care. Building approvals we want to see, I know it's a month on month, so it's pretty shitty. The reason why we like to see that is if building approvals are going through, it means more houses are being built. If more houses are being built, what do people have to do? More people need to approach the bank for fucking mortgages. If more people are approaching the bank for mortgages, that means the banks are lending more money. If banks are lending more money to that person to buy the home, that person is then going to buy the home, right? Which then the home company then has to pay all the fucking construction workers and blah, blah, blah. So what is it doing? It's stimulating the economy, right? If there's more homes being built, then there's more builders who are in a job. You see what I'm saying? If there's more bank loans being given out in mortgages to pay for the fucking homes, they're going to pay the wages of the construction workers. So it's a big fucking circle of life, right? You see what I'm saying? Fundamentals is just common sense, guys. I swear to God, it's fucking common sense once you get the hang of it, right? I know it's tricky in the beginning. My brain was fried in the beginning as well for about four to 6 weeks. I was like, 1 week I thought, oh, I get it. And then the next week I was like, fuck, I don't get it. And then the next week, oh, yeah, that's easy. And then the next week I was like, oh, fuck, I don't get it. Why am I getting stuck, you know? It just takes a little bit of time. After about 6 weeks of doing this every week, you will fucking get it and it will start to make sense. I promise you. That's if you do it right. Don't be lazy and do it 1 week and then not do it for 3 weeks and then try and do it a week later. That's not going to work. So next week we want to see cakes and manufacturing PMI. Commodity prices, yeah, we'll have a look. Cakes is quite important. I don't know why it's yellow. Employment change, yes, we want to see that. Unemployment change, yes. So why do we care about employment? If more people are in employment, more people are in jobs, means more people are getting fucking wages. If more people are getting wages, that means they can pay their rent, their mortgages, their car tick, their mobile phone bill, their internet bill, you know? So they're paying they're stimulating the economy. If more people are unemployed, then that's fucking bad, because that means people ain't paying the rent. People are falling back on their mortgage payments. People are missing a month on their car payment. They're not paying their phone bills, you know, so they're not still in the economy, and the economy's going into debt, right? That's why it's not good. Labour cost index, quarter on quarter. I don't know if you can hear that. My parrot's kicking off in the background. Normally I bring him in so he shuts up. Cakes and services PMI. Okay, we've got that. Yeah, so let's have a look. Next week we've got some decent news we want to see, right? And it's as easy as that, guys. This one takes a little bit extra time because I'm doing three economies at once, right? Now we're just doing one each time, so we can now fucking fly through this. What time are we on? 15 minutes. I'll try and get this done by the 25th minute, guys, okay? Was it last week? Okay, last week. So, this is how Forex Factory tries to catch you out. If you don't know what you're talking about and how to interpret this and understand it, you will look at that and you will see the colour green and you will think, oh, that must be good, right? Because that's just logical. Green means good, red means bad, right? The way that we're brought up, kind of, you know, psychologically, subconsciously, blah, blah, blah. But that's not good. That's fucking bad. Why? If you look at the previous was at 0.0. Now it's at minus 0.4. That's clearly fucking worse than 0, right? So why is it green? It's green because they forecasted it to be much worse. They forecast it to be minus 0.7, okay? And it came in better than forecasted, right? So it has come in better than they thought, but it's still worse than before. It was previously 0, now it's minus 4, right? So it's still worse than before, so that's actually negative, right? Don't get caught out by the fucking colours being green and red. CPI, okay, dog shit, bearish, dog shit, bearish. It was previously 2.6, and it's 2.4. 2.6, 2.5, bearish. 2.0, better than expected. Still overall shit. Minus 1, minus 3, bearish. Minus 6, 0.6, 0.2, bearish. RPA, that's increased, bullish. Bearish. 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 Right, so you can see it yourself, it's fucking weak. Canada is weak. Open this way. There we go. Okay, so it's as simple as that, guys. So when I come on here and I'm not doing this, you know, for you guys, right? Oh, this is how quickly it is when you're doing it by yourself. You literally come on here and you're like, bearish, 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 bullish, bearish, bearish, bullish, bearish, bearish, bearish. Oh, wow. It's fucking weak. So you know right away, you know? You just think, how many times does I say bullish there? How many times does I say bearish, you know? If one of them's 70-20, or, you know, 70 thingy, then 70-30, and then, you know, it's different, right? But, yeah, if one of them's if it's mixed, if you're like that, bullish, bearish, bullish, bullish, bearish, 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 bullish, bullish, bearish, and you're like, fucking hell, that was 50-50, then that's just known as mixed data, right? And that's all it is. You're not trying to work out, does that mean it's strong? Does that mean it's weak? It's just mixed data, and it's just neutral. You know, it's not closer to the positive or the negative, right? To the closer to the bullish or the bearish. It's just fucking mixed data, and there'd just be nothing you can really do with it apart from put it in neutral, right? Canada next week, we potentially, what's that? 26th of Feb. That's okay, that's now. Oh, so that's up until now. So we had a rate cut. We had a rate cut last week again. So the reason why you have rate cuts is because all the previous week's data was shit, you know, and you can only really cut into shit data. And this is another time where I'm saying something, but it's, what's the word I'm looking for? I fucking said it earlier. I forgot. Contradictive. Yeah, I'm now contradicting myself because I'm saying you can't cut rates when... Sorry. I'm now saying you cut rates when numbers are negative. You can't cut rates when numbers are going strong, right? And then you're going to say, well, Ryan, America cut rates 2 months ago and all the data was strong. And you're absolutely fucking right. You're absolutely fucking right. That's when you then have to take into account them, like pricing in all the kind of market pullbacks, not melts, not crashes. They're simply retracements. Trying to get this in before Trump gets into power, right, and trying to get a handle on inflation. That's all that we're trying to do in that case. So it's, you know, it's a seldomly that happens. Okay, it's normally you need low numbers to then cut the rates. If your numbers are strong and they continue to grow, you can't cut rates into that because inflation will fucking fly, and you'll end up like Venezuela, where you can literally take 4 wheelbarrows full of money down to the shop. And you can't even buy a loaf of milk because your money's worthless, right? So that's why you can't That's why you can't cut interest rates when everything's coming in good. They've cut interest rates because everything's going bad, right? Let's see what we've got coming up next week. Manufacturing PMI, I want to see that. Trade balance, yep. IV PMI, employment change, unemployment rate. Yeah, we want to see all of those, okay? Now remember, with Canadian dollar is also heavily pinned to oil. So if oil is doing well, Canadian dollar will do well. Oil is massively sales right now. I'll cover it right now, actually. So oil, you have to look at the kind of oil moves with obviously fundamentals, supply and demand, and yeah, anything kind of global that's happening in the world, wars, you know, blah blah blah, right? So right now, oil is bearish as fuck. Now you may see it coming up. Yes, that's what we want to see. Let me just go to oil. Right, there we go. Look, oil is bearish as fuck. So we've now got the move, right? We've got the first move. We want to see the pullback. I always go by the saying, no retest, no entry, right? I never take, see this first move here? I never take it, never. I wait for it to come down. I wait for the retest slightly lower, excuse me, and then I wait for the melt. So I'm waiting for it to come here, retest here and melt, or even better, I'd really like it to come and retest this zone. I'm not going to explain why did you put the box there. I'm not going to explain that. It takes fucking too long, and that's more stuff for my guys on Discord. However, I'm waiting for the retest. You've got it down here, boom. This is a really shit area of value. There's really not much value here. I would take it. Yeah, it's probably about the 500 Fibonacci. I would take it. I don't take anything less than that. I don't take 382. I only take 500 minimum, 618 and the 786. Okay. This is a 786, which I love taking this up here. And I will take this if it comes back. So why is oil sells? Well, first of all, rigs are pumping out a fraction of the oil that they should generally pump out, right, in supply. So you can get that type of information from OPEC websites. Trading Economics has it. Even Forex Factory will have it if you look up their OPEC stuff, right? Loads of countries that normally pump out, 2 million barrels here, they're down to like 800,000 barrels a day and stuff. So when you look on Forex Factory and you see oil inventories and it says like -3 million, you think, wow, there's a, when it's into the minus, that means they're eating into the supply, they're eating into the stocks, right? So -3 million, you're like, wow, there's a huge demand for oil. No. Generally, yes, that is the case, but you need to realize they're pumping out a fraction of the oil that they generally pump out. So yes, it looks like everyone's buying the stock, but you have to remember they're buying a fucking limited stock. We're only pumping out a fraction of the oil that we generally pump out, right? So everyone's just buying the tiny shitty little amount that's there. If we were still pumping out 2 million barrels a day at every single rig all around the world, and we had this massive supply, you would then see the oil isn't doing fuck all. Nobody's buying it, right? 2 years ago, China was responsible for buying 70% of the world's oil. Last year, and forecasted again for this year, they're only purchasing 20% of the world's oil, leaving a 50% massive fucking window that nobody can fill. Nobody on the planet can fill that void, right? Unless China starts picking up. This is why markets have been really shit. I still haven't placed a trade yet, guys, for in January. I haven't placed a trade. I'm still waiting. And if you look, all the big traders are the same because the markets are just like that going sideways. If you're trading on the 30-minute, the 1 hour, that's absolutely fine. Of course, you can fill your boots because you're just doing intraday trading, right? I'm the type of guy, I wait until it hits here, I'll enter it, and I'll leave it for 20 weeks. You know what I mean? So we have you have to understand the context, right? So, there are also tons of rigs all around the world. This is number 3 now, point number 3. There's also tons of rigs all around the world which are now stopping for maintenance, right? Now, if you know anyone in the oil game, they will tell you oil companies will never, ever, ever in a million years close down rigs for maintenance if they already know the oil production is going to be large in the upcoming year. They will never do it. They would literally rather, shuffle along with a broken heel, you know what I mean, and just try and pump out as much oil as they possibly can to make as much money as they can and fix it later because they know that a downturn is going to come, right? A lull in the battle is going to come. But they're already closing rigs, and they're already refurbing, and that takes months and months, and they will never ever close. They will never ever do that if they know production's going to be high. Okay, so that's the third clue. Tells you oil is fucking sales. You're only looking for sales. Number 4, Trump has just come on, and he has said he's going to demand that OPEC and Saudi Arabia drop their oil prices. So you've got 4 major global key factors telling you this is fucking sales, right? Then, when you come across to the technical analysis side, if you want to be a triangle retard, look, mummy, my lines are meeting. You know, there you go. You've got your technical analysis. Technical analysis is very important. I know in some of my videos I take the piss, but again, you need the context. I'm only taking the piss if you trade based on this, right? Why? Because you see this zone here. Look, what it'll do is, boom, it'll break up, it'll come to here, you'll enter your buy, and then it'll go like that, fuck off. And you'll be like, why the fuck did that go there? But how can that possibly be a sell? It broke my fucking triangle. Yes, because you haven't taken into account there is a massive area of fucking value right here in the 786 Fibonacci, right fucking here, and we're in a fucking downtrend. We're looking for sales. Fundamentally, you're looking for sales. So you've taken a buy trade because this candle here has passed your fucking little triangle. Oh look, mommy, it's went, and it's got here, and then it's fucking melted and went against you, and you're like, how did that happen? Because you didn't understand the fundamentals behind it. If you had, you would know that you're looking for sales. So then when oil breaks above here, you're looking for it to hit this area of value right here. Boom, small candle, large engulfing, blah, blah, blah. There is reasons why you would put it there. I can't be bothered explaining because it's another podcast on its own. And then you would take sell when it gets to here, right? And that's all I'm doing right now, guys. Sorry for the messy page, just trying to explain so much. But you get my point, right? So that's it, guys. I am fully expecting and anticipating oil to pull up minimum here. I really want to see it hit here. I really want to see it hit here. But I'm not going to be buying it. Even if that's coming up, I'm just ignoring it, guys. When it hits here, you enter the sell, your stop loss is up here above the green, and you're fucking riding that motherfucker down. If it breaks below here and then goes back up for retest, you could close 80% of your trade here, leave 20% of a runner, and then at that point, move your stop loss to break even. And when this goes back up here, retest this previous support, once broken, becomes the new resistance and starts to melt down here. You would then enter a fresh position here with your stop loss above here and ride it to the downside. You've now got 2 positions running on that for weeks and weeks and weeks. Tiny, tiny risk, massive reward. If you ever get stopped out, you've been stopped out tiny. When you get a hit, take your profit, your hit, take profit is fucking huge. That's why I love this strategy, guys. It's not get rich quick. You need patience, right? And coming back onto the Canadian dollar, if this is going down, you know, we expect this to come up to here and then melt down, then Canadian dollar will be weak because Canadian dollar gets all of its power, predominantly 80% of it, from oil. Okay, and that's how you piece all this stuff together. Next week we've got a lot of news. Well, not a lot. We've got a good bit of news that we want to see next week for Canadian dollar. Okay, so let's now go back. Canada is weak. Okay, moving on. I'm going to do this rapid now. We're at 28 minutes. I'll try and get done by 35, right? There's so much to explain, and I want to tell you. Do you know what I mean? I want to give you this fucking knowledge so that you can go away and use it and not bother with these Win Lambo fucking idiots on Instagram. UBS economic expectations 70.7. Okay, that's good. Trade balance shit. Economic barometer good. Retail sales good. Okay, so that's pretty positive. For me, I'm gonna put CHF is always between weak and neutral. Even though these are good numbers, let's have a look at last week as well. I may put it in. I'm gonna put it in neutral. I pretty much always put it in neutral. However, in my mind, right. Sorry, I keep saying M. I always have it in my mind that it's potentially weak as well. So in my mind, I know that CHF is neutral, but with the USD being so strong, it normally means that CHF gets weaker during USD bulls. Okay, so if we find this week that USD does start pulling back and going bullish again, then in my mind, I would actually change this to week, okay? Now, you don't always do that. You don't just change because of, oh, this news, oh, the next one changed, so that must be strong again. You don't do that. And this is why it's quite complicated to explain fundamentals, and I'm trying to do it the best way I can for you, because it is a little bit tricky, right? Because one minute I'm saying, yeah, you don't just change it from weak to weak to strong because you get 1 week of good news, and then in some parts I'm like, yeah, you would. You know, it's a little bit weird. You kind of need that feeling for it. It's hard to explain, guys, but I am trying to explain it the best I can, so I do apologise. Next week, what have we got? Unemployment rate. Yeah, okay. Manufacturing. Well, it's not a manufacturing country, so I don't care. So for me, I have got CHF in neutral, and I've pretty much always got it in neutral, right? Let's move on. We're nearly there, guys. I've only got 3 more to go. Well, 3 after this, sorry. So let's have a look. Euro's fucked, isn't it? So bullish, bearish, bearish. Sorry, I'm talking shit. That's bullish. It's still fucking terrible, right? It's 10, but it's better than before. So unemployment is lower, so that's actually bullish. Sorry, my bad. Bearish, bullish, bearish, bullish. Bearish, bearish. Sorry, bullish. Sorry. We only really care about France and Germany as well. I don't know why I'm covering Spain here. We only really care about France and Germany because they're the 2 economies which actually shape the euro. Spain and Italy, they're fucking tiny. Nobody cares, right? French consumer spending month on month. That's bullish. GDP bearish. Output bearish. Spanish again, who cares? I mean, it's bullish, but it's not going to affect the euro, you know, so there's no point really talking about it. German, bearish. 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 Bearish because it's increased. Like it's increased from 10 to 11. So yeah, it's bearish. Euro's fucked. Euro is weak. Still same as last week. I knew it would be because you don't just change them from week to week, right? Next week, what we got lining up? We've got loads, right? French final manufacturing PMI. You've got PMI next week. We have got CPI. We've got PMI again. Yeah, so we've got quite a lot of news next week. When I see, I don't anticipate anything, you know, being better. And even if it does, even if these come in better, like 50 and blah blah blah, it's not just going to change the strength because it's only 1 week of good news, right? You need a good few weeks of consistently and continuously gaining and gaining and gaining before you would move it from weak into neutral, from neutral into strength into strong. Okay. Moving on. Let's get through this. GBP. Pound is pretty fucked recently. Yeah, bearish, bullish, 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 bearish. But there's not much to really go on there. Let's have a look at last week. The pound is fucked. I already know it's weak. Let's see what's kind of weak to neutral. I had it down as weak before. Let's have a look. Bullish, bullish. Bullish, bearish, 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 bullish, bearish. Yeah, it's kind of... and these are decent numbers. So it's between weak and neutral, right? It's definitely not strong. It's definitely between weak and neutral. So if you want to put it in... you know, it's opinions at the end of the day, right? If you want to put it in neutral, that's fine. If you want to put it in... bearish, that's also fine. If you want to put it in weak, sorry, that's also fine. Okay. I'll give it the benefit of the doubt and I'll put it in neutral for now, but in my mind I know it's still between that borderline, right, of weak and neutral. Next week, what we got? OPEC meetings, that's good if you're in oil. PMI, construction PMI, official bank rate, blah blah blah. Okay, so they've priced in a rate cut, which I think could happen because we've previously had some data's been coming down, right? The numbers have been coming down. We've been getting some okay data, wishy-washy, but it has been coming down, so they could see a price cut, a rate cut here. I'd probably say there's a very high chance of a rate cut. All right, so let's see what they do. But yeah, got it as neutral and then potentially weakness. Moving on, two more left, guys. Very quick and easy. Japanese yen, bearish, bullish, bearish, bullish, bearish, bullish, bullish, bearish. Japanese yen still fucked. That's mixed data, but overall it's just fucked. You know, they're shit. I'm keeping yen in weak. It's between weak and neutral again. I'm just keeping it in weak because it's just so fucking wishy-washy. I had it in neutral last week. I know you don't just change from that, but yeah, it's not giving us that consistent strength. You know, if it was giving us constantly good numbers all the time in stuff that we care about, it's given a couple of good numbers here, but it's all shit. You know, it's all shit that we don't really care about. Unemployment, we do. Yeah, Tokyo CPI, we do. Consumer confidence, we don't give a shit. You know, so yeah. It's not retail sales we do care about. It's still a bit wishy-washy. You could put, if you want to keep it in neutral from last week, you can keep it in neutral. Okay, that's fine. But between neutral and weak, just so you know. Yeah, we've got news next week we want to see. Right, moving on. USD. Bullish, bullish, bearish, bullish. Bearish, bullish, bearish, but it's only consumer confidence. We don't really care. Bearish, bearish, prelim wholesale inventories, bearish, crude oil. See, look. There's a massive supply, very little demand, and that's, you know, that's a really shit thing, me. When there's not much being pumped out. Federal funds rate hasn't changed. That's fine. They're probably not going to change it for quite some time. Bearish, bullish, bullish. It's only saying red because they thought it was going to be 2.5, so that's bullish, bearish, bullish. Let's have a look. Oh, that's natural gas. Sorry, we don't care about that. I was just flying through it there. Gold PCE, bullish, 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 and we don't care about that. So overall, the USD, although we have got, so you could say that's mixed data there, right? It is still the strongest economy right now out of all of these, so it is remaining in strong because there's so much else to take into consideration. We're just waiting for Trump to finally say what his tariffs are going to be. Is he going to make America tax-free? He keeps saying he wants to get rid of federal taxes, right, to essentially make America like Dubai, tax-free, which is fantastic. However, if you do that, where are you going to get your money from for all these, you know, public sectors and blah blah blah? Well, you have to get that money from import and export. So you're going to have to put extra charges when you're doing business with other countries, right? So it does have a major effect just becoming tax-free. So we need to see how that plays out, okay, because it is going to have a major effect on the market. And that's why you see the market's just like that right now. Yes, if you look on the 15-minute, 30-minute hourly, yeah, you're getting what you would count as a big move. But if you look on the 4-hour or the daily, it hasn't even moved that, you know. And I look for candles in the weekly that have moved, you know, 1, 2, 3, 4, 5, 6, 7 weeks, you know, running. Yes, if you look on the hourly, you'll see a big move, but it's not a big move for me. On a daily, it's probably about that size. It hasn't even budged, you know. Next week is a big week. We've got Jolts. Oh, is this NFP? Yes, we've got. So NFP, it's a big week. I don't have to fucking tell you. We've got Jolts, non-farm payroll. Jolts just job openings. We've got service PMI, employment change, unemployment claims, average hourly, non-farm employment change, unemployment rate. Yeah, so good. Average hourly earnings. We like to see that if it goes up. Basically, why do we care, right? So if average hourly earnings goes up, it means you're making more money, right? If you're making more money, you're gonna buy more shit, right? You're gonna spend all your money buying more shit. and it stimulates the economy. That's why it's a good thing. If average earnings are up, it's positive for the economy. If average earnings are down, it means people are skint. They're not going to be going out eating in restaurants. They're going to be like, oh my god, how do I afford my groceries? My wages aren't enough to cover it, blah blah blah. So, you know, people are going to be staying at home as opposed to out shopping and spending and blah blah blah. Okay, that is it, guys. That is it. So, a recap for me, what I have got is strong USD only, weak NZD, CAD, Euro, Japanese Yen, neutral AUD, CHF, GBP. That is what I've got, guys. All right, that is it. I hope you enjoyed this. So previously, remember, we were talking about the 1st of February, we are going to increase our prices on our Discord channel from £97 a month to £147 a month. The reason for this is during last year, I joined about 7 different Discord trading channels just to see, is there any way we can improve? You know, like, is there something that other groups are doing that we're not doing that we can give? And I'm not shitting you guys. I swear to God, there wasn't a single group that I found that provided every single fucking thing that we provide. There would be some that would provide fundamental data, fantastic, but they won't tell you when they've entered a trade. They won't live trade in front of you. So whenever I go to take a trade, I will literally trade my account right in front of your eyes. I'll do a live video on Discord. You guys can jump on the video. I will talk you through the trade. I'll say, right guys, look at copper right now. Look at that area of value, blah, blah, blah. And I will explain the trade to you, right? And if I'm going to enter it, I'll say, right guys, I'm going to enter now. Bang. Entry here, stop loss here, risking, you know, 0.25%, 0.5%, 2%, whatever you want to risk. It's up to you. I trade smaller because my account's much larger. And it's a real account. It's not a fake demo funded account that they pretend it's real. So I have to be very careful, right? Because it's clients' accounts as well. It's clients' money as well. So I do it right in front of you so you can physically see the trade and I discuss it with you. So you can say to me, Ryan, why did you put the stop loss here? How did you know to put the stop loss here? How did you know that this was going to be the take profit? And I explain the whole thing to you, all right? Also, we do live stuff all during the week. My business partner who does scalping, so he gives 2 to 3 scalps every single day. We give you the trade so that you can make money. We give you, you know, in line with us as you're learning. The other thing I noticed, every single group I was in, whenever they offered one-to-one sessions, like, okay, you jump on a live with me, we'll run through the charts, I'll create a scenario, you explain to me, okay, Ryan, based on your scenario, I would enter here, my stop loss would be here, my take profit would be here, and I would say to you, okay, why? And you explain to me why. You know, I build it up with you. It's called one-to-one mentorship. Every one of the groups offered that, but they offered it for 4 1-hour sessions. The minimum was like $1,500 for 4 1-hour fucking sessions. Some of them were offering it for like $2,700 for 8 sessions over like 2 months, right? So it's like 1 time a week. Every single day, guys, I'm in the Discord and I say to you, lads, there's no trade for me today. If any of you want one-to-one mentorship, let me know, hit you up, and I will literally sit here with you for fucking 2 hours. You're like, what else am I going to do? I'm not doing anything else anyway, right? I don't have a job. This is what I do full time. So, I literally give you one-to-one mentorship. I don't charge you fucking $1,000 here, $2,000 there. I don't charge you. I literally do it for the same price of the subscription. So it was previously £97 a month. We're now increasing it to £147 a month. It's still cheaper than every single group I joined last year, and we offer 100 times more. Also, we're now going to change it. We're going to extend it to the 1st of March. Why? Because we couldn't really promote that we were going to give everyone a chance to jump in at £97 a month, because my business partner was severely fucking ill to the point like he had a major flu, but it was a flu that like he was literally floored. He couldn't even move out of his bed for 2 weeks. He was totally fucked, and he's the one that deals with like all the marketing, the posts, and blah blah blah. So we didn't really get a chance to push it. So we're going to give people the chance. People didn't know that this was the last month, so it's not really their fault, right? And we're not shit cunts. We want to help people out. So this month we're going to push it one more time. We're going to give you this month to jump on board if you wish at £97 a month, and then once we increase the price, you will simply continue to pay that £97 a month. All right. But anyone who joins after the 1st of March, it will then go to £147 a month. All right, guys. Hope this is beneficial for you. I'm Ryan Mack. This is the trading, guys. Much love. Have a great weekend. If you don't see anything that you want to trade, don't fucking trade. It's just, you as a trader, you have the choice to take a trade or wait. or walk away, right? Protect your capital at all times. You don't have to be in a trade every single day. I haven't placed a single trade in the whole of fucking January. I'm sitting at my desk, I'm waiting like a fucking sniper, and I'm ready to take a shot. Now, because I trade on the weekly time frame, that gives me so much freedom in my life. I can literally wake up in the morning, go at that for every pair. Nope, 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 nope. Maybe 2 weeks. Maybe by the end of this week I'll have an entry here. That's about 3-4 weeks away. That's about 5 weeks away. Oh, maybe in the next couple of days that's going to come in. So I already know. I don't need to sit here in front of my screen for fucking, 10, 12 hours a day waiting for a trade. I can already tell you that's going to be 2 weeks. So then I already know I've got fucking 2 weeks of my life off without having to do anything, It's fantastic. That's why I like it. Okay, guys, much love. I'm Ryan Mac. This is the Trading Guys. Have a great weekend.